Right now, there are seniors all across this country who are receiving Social Security checks that are significantly smaller than they should be. And the painful part is, Social Security isn't making a mistake. The government is doing exactly what it was told to do. The mistake was made by the senior. Not because they did anything wrong, but because they didn't know about one specific document that could change everything. And by the time most people find out this document exists, they've already left hundreds, sometimes thousands of dollars sitting on the table. So if you are 65 or older and you receive Social Security, I need you to watch this video carefully, because what I'm about to share with you could directly change the size of your next check. Let me start with my uncle. He retired a few years ago after working most of his adult life. When he first started receiving Social Security, he was excited. He'd worked hard, he'd paid into the system for decades, and he was finally going to see that money come back to him every month. But when the first direct deposit hit his account, something felt wrong. It was much lower than he expected. He called me, confused, and asked what was going on. And when I dug into his situation, I quickly realized what was happening. Social Security wasn't sending him his full benefit. Medicare Part B premiums are automatically deducted from Social Security payments before the money ever hits your bank account. And in my uncle's case, because of his income from the years just before he retired, Medicare had decided he owed a significant surcharge on top of the standard premium. He was paying hundreds of dollars extra every single month, automatically, silently, and without anyone ever explaining to him why or what he could do about it. The day I showed him the document that changed all of that, his net check went up by more than 45%. And that document has a name. It's called Form SSA 44. PlanFit.
Now, before I explain exactly what Form SSA 44 does and who qualifies for it, I need to make sure you understand why this problem exists in the first place. Because once you understand the system, you'll understand exactly where the opportunity is. Here's what most people don't realize. Your 2026 Medicare premiums are not based on what you earn right now. They're based on your income from 2 years ago, specifically your 2024 tax return. The Social Security Administration looks back 2 years to determine what Medicare charges you. That's the rule. And for most people, it doesn't create a problem. But for a specific group of seniors, it creates a very expensive one. Kiplinger tells think about what happens when someone retires. In 2024, maybe they were still working, earning a solid salary, maybe even earning good money in the final stretch of their career. Their income that year was high. Then they retire. Their income drops dramatically. They go from, say, $180,000 a year down to $60,000 or $70,000 in Social Security and retirement distributions. But Medicare doesn't care about what you earn today.
Because Medicare uses 2-year-old income data, many beneficiaries find themselves paying IRMA surcharges based on income they're no longer earning, and those surcharges can be enormous. This penalty has a name. It's called IRMA, the Income-Related Monthly Adjustment Amount, and this is where things get important, so pay close attention. For 2026, the standard Medicare Part B premium is $202.90 per month. But if your income from 2024 exceeded $109,000 as a single filer or $218,000 as a married couple filing jointly, you are automatically placed into a higher premium bracket. And it doesn't stop there. The 2026 IRMA brackets can increase your Medicare Part B monthly premium by as much as $487 per month. On top of that, Part D prescription drug coverage carries additional surcharges of up to $91 per month. Now let that sink in for a second. The standard premium is $202.90, but if you cross the income threshold, you could be paying $284, $395, $527, or even $689 a month. That's being pulled straight out of your Social Security check before you ever see a penny. If your benefit is $1,800 a month and Medicare is deducting $527 from it, you're living on $1,273. That's a massive difference. And here's the part that should make you angry. Many of the people paying that surcharge are retired. They don't earn that kind of income anymore. But because Medicare is looking at a tax return from 2 years ago, they're still being charged as if they do. Now, here's what many people miss, and this is exactly the kind of thing that costs seniors real money every single month. IRMA doesn't work like a traditional tax bracket, where only the amount above the threshold gets the surcharge. It works like a cliff. The moment your income crosses into the next bracket by even $1, the full surcharge for that entire tier kicks in.
So, a married couple that earned $218,001 in 2024, $1 over the threshold, will pay the same elevated premium as a couple that earned $270,000. $1 over the line, and suddenly Medicare is deducting hundreds more from their checks every single month. A 40% surcharge on the Medicare Part B premium alone is nearly $974 per year per person, or nearly $1,948 per year for a married couple where both are on Medicare. That's almost $2,000 a year vanishing, not because you're rich now, but because of what your tax return showed 2 years ago. Federal Pension Advisors, the finance buff. And this is where Form SSA 44 comes in. This is the document my uncle used. This is the document that most people in his situation have never heard of. Form SSA 44 is provided by the Social Security Administration, and it gives you the right to formally request a reduction in your IRMA surcharge if you have experienced a life-changing event that reduced your income. That's the key phrase, life-changing event, because the SSA has a defined list of situations where they will override that 2-year look-back and use your current income instead of your old income. And when that happens, those surcharges can be eliminated or significantly reduced. For many seniors, this means their net Social Security payment jumps substantially, sometimes by hundreds of dollars every single month. Smart asset. So, what qualifies as a life-changing event? This is where the opportunity is, and I want you to pay very close attention. The 8 qualifying events are marriage, divorce or annulment, death of a spouse, work stoppage or work reduction, loss of income-producing property, loss of pension income, an employer settlement payment or closure, and a catch-all category for any other event that caused a significant income reduction. Now, notice what's on that list. Retirement. That's work stoppage. If you stopped working in 2024 or 2025, you may qualify. If your spouse passed away, you may qualify. If you got divorced, you may qualify. If your pension was reduced, you may qualify. The most common life-changing event for an IRMA appeal comes from seniors who were still working at 63 but retired before reaching 65. People who had strong working income in the year Medicare looked at, but who are now living on a fraction of that. If any of these situations applies to you, there's a very real chance you are overpaying Medicare right now. Income Lab. Here's another detail many viewers overlook. For 2026, Social Security starts with your 2024 tax return to determine your IRMA. But if your income has dropped since then due to a qualifying event, Form SSA 44 lets you request that they use more recent income instead. You're essentially saying, yes, my 2024 return showed that income, but things have changed. Here's the event that changed them, and here's what my income actually looks like now. When the Social Security Administration accepts that, they recalculate your premium using your current situation, not your past one. And if your appeal is approved and you already paid those excess surcharges, the SSA will retroactively refund your overpayments. That's money you already paid, coming back to you. Prepare for Medicare. United Medicare Advisors. Now, let me give you a real-world example of what this means in dollars, because I think this makes it crystal clear. Imagine a couple where one spouse just retired. Their 2024 tax return shows a MAGI, that's modified adjusted gross income, of $340,000. That's 2 full-time incomes from a working year. Now, one of them is retired and income is way down. But because of that 2024 return, Medicare placed them in IRMA Tier 3. They're paying $527.50 per month in Part B premiums alone. That's $324.60 more than the standard premium. Add Part D surcharges, and that couple is paying over $9,200 per year in IRMA charges based on income they no longer earn. $9,000 a year. That's real money being taken out of real retirement accounts every year, often for years before someone discovers it can be challenged.
But the moment they file Form SSA 44, document the retirement, and show their current income, the SSA can remove that surcharge and bring their premium back down toward the standard rate. On their Social Security check, that can mean $300 to $400 or more per person per month showing up in their account that wasn't there before. Income Lab. This is where costly mistakes happen, and I want to make sure you don't make them. The biggest mistake people make with Form SSA 44 is waiting too long to file it. Timing is critical. You should file the SSA 44 form as soon as your income changes due to a qualifying life event. Delays could mean months of overpaying premiums, and adjustments are generally retroactive only for the current year. Every month you don't file is another month where Medicare is quietly deducting money from your Social Security check that you're entitled to keep. If your qualifying event happened in early 2025 and you're just now finding out about this form in mid-2026, you may have already lost over a year of overpayments. Don't let more time go by. Grimes Co. The second mistake, and this one is subtle, is not realizing that the income reduction has to be large enough to move you into a lower IRMA bracket than what your old tax return showed. If your income dropped but you still fall in the same bracket, an appeal won't change your premium. So before you file, you want to estimate your current year income, compare it to the IRMA brackets, and confirm that the reduction would actually bump you down a tier. If it does, you have a strong case. If it doesn't quite get you there, you want to think about whether there are other income adjustments you can make before year end to get you into better position for next year. Medicare mindset. The third mistake is assuming this only applies to wealthy people. It doesn't. The IRMA surcharge begins for single filers at $109,000 in income. That's not an enormous amount of money if you're factoring in a year where you were still working and had wage income, retirement account withdrawals, and maybe some investment income all adding up together. A lot of middle-class professionals who just retired find themselves surprised when Medicare sends them a letter saying they owe extra premiums based on a year they no longer live in. These are exactly the people Form SSA 44 was designed to help. Kiplinger. So let's talk about how to actually do this. To request a review, you complete Form SSA 44. The full title is Medicare Income-Related Monthly Adjustment Amount Life-Changing Event, and provide supporting documents along with it. What supporting documents? If your income dropped because you retired, you submit a copy of your most recent tax return showing the reduced income, along with a letter from your former employer confirming your retirement. If your income dropped because your spouse passed away, you submit the death certificate. If it was a divorce decree. The form itself walks you through 5 steps: identifying your qualifying event, documenting the income reduction, providing your tax information, and signing. You can submit the form and supporting documents by mail, fax, or in person at your local Social Security office. You can also use the SSA's online portal through your My Social Security account. Kiplinger +2. Here's what happens after you submit. The SSA typically takes a few weeks to process your request. If approved, your premiums will be adjusted to reflect your current income situation. If the SSA denies your appeal, you still have options. You can request a formal hearing with the Office of Medicare Hearings and Appeals within 60 days of the denial. In other words, submitting Form SSA 44 is not a one-shot deal. There are levels to this appeals process. Most people who have a genuine qualifying event and submit proper documentation see their appeal succeed. But even if the first response isn't favorable, you have the right to escalate. Grimes Co., United Medicare Advisors.
And there's another detail I want to make sure you don't overlook. If you're married and both of you are on Medicare, each of you must submit your own separate Form SSA 44. One form does not cover both spouses. This is a very common error. One spouse files, the other doesn't, and the family is only saving half of what they could be saving. If both of you are subject to IRMA surcharges, both of you need to file. Given that a 40% surcharge on Part B alone can cost a married couple nearly $2,000 per year, and higher tiers cost even more, both filings matter. Medicare Mindset, the finance buff. Now, I also want to tell you about something that connects directly to this, something that affects seniors at the other end of the income scale. Because while IRMA affects people with higher past income, there's a separate issue affecting seniors at the lower end, and that's the Medicare savings programs. For seniors who qualify, Medicare savings programs can actually have the state pay the Part B premium on their behalf entirely. If you're on a fixed income and Medicare is deducting $202.90 from your already limited Social Security check every month, eliminating that deduction completely would mean roughly $2,435 more per year in your pocket. And most people who qualify for this benefit have never applied for it. If you want me to do a full video on exactly who qualifies for Medicare savings programs and how to apply, let me know in the comments below. Grants for seniors. But let's come back to the big picture here, because I want to make sure you leave this video with one clear action item. If you or your spouse experienced any of the following in the past year or two: you retired from work, you reduced your work hours significantly, your spouse passed away, you went through a divorce, you lost pension income, you lost income-producing property, you need to look at your current Medicare premium right now. Check your Social Security benefit statement. If the Part B deduction shows anything above the standard $202.90 per month, you are in an IRMA bracket. And if your income today is lower than your 2024 tax return suggested, you may have the right to challenge that surcharge using Form SSA 44.
For a couple paying the middle IRMA tier, $395 a month each, eliminating those surcharges would put an extra $384 combined back into their Social Security checks every single month. That's $4,608 a year. For a couple at the higher tiers, we're talking about far more than that. In documented real-world cases, the potential savings from a successful SSA 44 appeal have ranged from $13,000 to $28,000 in unnecessary Medicare surcharges over the span of the appeal period. That is not a typo. Thousands of dollars quietly being taken from seniors who didn't know they had the right to fight back. Income Lab. The document exists, the right exists, the process exists. What's been missing is the knowledge, and that's exactly what this channel is here to provide. Most people don't realize that Social Security and Medicare have built-in appeal mechanisms specifically for situations like this. They don't teach this in school. Most financial advisors never bring it up, and the government certainly doesn't send you a letter saying, by the way, if your situation has changed, here's the form you can use to get more money. It falls entirely on you to know it exists. Now you do. If you're not sure whether you qualify, don't guess. Download Form SSA 44 directly from ssa.gov. It's free, it takes a few minutes to review, and it could be the most valuable 15 minutes you spend this month. Take it to a financial advisor, a benefits counselor, or your local Social Security office if you need help filling it out. But don't put it off. Every month you wait is another month of overpayments. And remember, if your appeal is approved, the SSA will refund any IRMA surcharges you overpaid. The money doesn't have to be gone forever. United Medicare Advisors. Now, before I go, I want to say this. The information in this video is just one piece of a much larger puzzle. The rules around Social Security benefits, Medicare premiums, IRMA surcharges, income thresholds, and appeals processes change every single year. The 2026 brackets are different from 2025. The 2027 brackets will be different again. New rules come out, new deadlines emerge, and every single change has the potential to cost you money or save you money, depending on whether you know about it. That's why subscribing to this channel matters. I cover these updates every week so that you hear about them before they affect your check, not after. If you found this video useful, subscribe right now and hit the bell so you never miss an important update. Because in retirement, the difference between knowing and not knowing isn't just information, it's income.